Do you ever feel like everyone else understands accounting, but you're still trying to figure out what on earth a debit is? Here's the thing, if you don't know how accounting works, you're not alone. And the good news, you don't need a finance degree to understand it. And here's a real game changer. At the end of this video, I'll show you how understanding this concept makes reading your profit and loss report so much easier. It's a tip that can help you make faster, smarter business decisions. So stick with me to the end. In this video, I'm going to walk you through what accounting actually is in plain English, how the basics of double entry accounting work, and why it's still used after 500 plus years. A real story from a business owner who completely turned around once they understood a few key accounting concepts. And a simple, practical way to apply this in your business today. So if the word accounting makes your eyes glaze over, stay with me. This is where it finally starts to click. Accounting is the language of business. It helps you understand what's going on in your business financially, where money's coming from, where it's going, and what's left over. If you can read a bank statement, you're already halfway there. Accounting just puts those same transactions into groups or categories, and it tracks how these categories affect your business over time. Now let me explain where it all started. It actually goes back over 500 years. A man named Luca Pacioli was a 15th century Italian mathematician. He wrote about a method merchants were using in Venice. That method? Double entry bookkeeping. And get this, it's the same system we still use today. And that's because it works. Every transaction is recorded in two places, once as a debit and once as a credit. That's why accountants are obsessed with balancing. Debits must equal credits. And more good news. Accounting packages like Xero, QuickBooks, and MYOB all have systems to help ensure that this double entry process is followed. And the ATO loves it as well, with the two entries. Often one of the two entries relate to movement of money, and that shows up in your bank statement. Once your bank account is reconciled, you can be confident that all transactions have been accounted for. Nothing is missing. And that's why the ATO requires a double entry system of accounting for business taxpayers, especially companies and trusts. Let me give you a really straightforward example. If you buy a $2,000 laptop for your business, your cash goes down $2,000, that's a credit, and your assets go up $2,000, that's a debit. That's double entry. It's like the accounting version of Newton's third law. Every financial action has an equal and opposite reaction. To get the debits and credits right, you just need to understand some simple rules. All transactions can be categorized as either income, expenses, assets, liabilities, or equity. You will notice in your accounting package a list of account codes. Each account code is classified as either income, expense, asset, liability, or equity. For example, the codes sales and also interest earned are classified as income. Stationery and tools are classified as expenses. Computers and bank accounts are classified as assets. Loans and ATO debt are liabilities. Equity is different depending on your trading structure, and you won't normally code to equity on a day-to-day basis, so I won't go into detail about equity today. Now, each of these categories has a natural balance. Expenses and assets are naturally in debit. That means increases are debits and decreases are credits. Income and liabilities are naturally in credit. That means increases are credits and decreases are debits. Now remember, every transaction affects at least two accounts. That's the whole point. Most accountants learn about debits and credits on something called T accounts that look like this. Debits are on the left and credits are on the right. I've highlighted the account's natural balance. Remember, that depends on the category for the account. Cash is an asset and has a natural debit balance, so a debit will increase the balance and a credit will reduce it. Now let's say you pay $200 for insurance. Your expenses, insurance, go up, that's a debit. Your cash goes down, that's a credit. Next, you process an invoice for $1,000. Your income goes up, that's a credit. Your accounts receivable also goes up, that's a debit. And next, the customer pays that $1,000 invoice. Your bank goes up, that's a debit. And your accounts receivable goes down, that's a credit. It always balances. If it doesn't, something's missing. If you're lost, I really want you to stop and rewind. Go back and watch this again. I promise you, once the penny drops, you've got it. In this case, everything balances. After these transactions, you now have $800 in the bank. You've received $1,000 of income, and you paid $200 in expenses, so you have an $800 profit. Let me tell you about James. James runs a carpentry business. Busy, good turnover, but constantly stressed about cash. Every BAS was a scramble, and he had no clue whether he was actually making money. He told me, "I just go by what's in the bank. If there's money there, we're fine." Does that sound familiar? We sat down, showed him how accounting works, and helped him set up a proper chart of accounts in Xero. We explained what income categories to use, what expense categories to use, and how to code owner payments, not just treat them like random cash outs. Now, fast forward 3 months, he could see exactly what his profit margin was. He started putting aside GST weekly, and he actually took a holiday for the first time in 4 years, all from learning some basic accounting. Here's the easy way to apply this in your business today. First, use proper accounting software like Xero, QuickBooks, or MYOB. Then set up a real chart of accounts, not just random categories, and record transactions regularly, not just at tax time. Be sure to learn the basics of reports, profit and loss, balance sheet, and cash flow, and also reconcile your bank accounts every week. But here's the thing, none of this will really help you unless you know how to read a profit and loss statement. That's where the real insight into your business comes from, knowing what the numbers are telling you and what to do with them. So, if you're ready to turn your numbers into decisions, click through to the next video, How to Read a Profit and Loss Statement Without Falling Asleep. I'll walk you through it step by step. See you there.